In today's video, traders, I'm going to be talking about trading range-bound markets. These are markets that are moving sideways, back and forth, and not really trending a whole lot in one direction. In today's video, my goal is to share some points with you and some tips with you on how you can effectively trade a ranging market that we see again and again in the currency market. And let's go ahead and get into the video right now. Hello traders, and welcome back to another one of my videos. If you're new here, my name is Nick. I make all sorts of trading educational content here on YouTube for free. In fact, this is part 6 of our price action course that we're doing for free here on YouTube. I do ask, if you're getting help from my channel, if the stuff that I put out is helpful to you, please help me back by giving this video a thumbs up down below. It really does help a lot. I know a lot of YouTubers ask for thumbs up, and it's because it helps us get more views, and I want to share this message with more people. So if you are appreciating this, please make sure you hit that thumbs up down below. So let's go ahead and get into this concept. This is going to be talking about range-bound markets. How do we trade them? How do you actually take advantage of a market that's not really moving a whole lot in any particular direction, right? Everybody knows about trading trends, right? Having concepts where the market is moving up and it's trending and we see kind of pullbacks and there's opportunities to go long and to join a trend. Of course, that's a pretty popular concept. But today we're going to be talking about a little bit something different. This is going to be something where we're talking about a market that's not really actually going any really distance at all. It's kind of just traveling back and forth. And in fact, trading ranges is actually one of my absolute favorite ways to trade. Now, it's not as popular, I feel like, as trading trends. A lot of people love to trade trend continuations, but I really do think that there are some great opportunities to trade range-bound markets, especially if you are patient enough to wait for some good opportunities. Now, the cool thing about range-bound markets is that generally you can draw some sort of structure on them. For example, we'll draw a theoretical kind of resistance line and a theoretical support line, right? And you can see that there are opportunities along kind of the lows to get involved on a calculated pullback to that level, as well as on the top where we could find potential resistance levels to get involved on the short side. Now, range-bound markets are not something that are going to last forever. In fact, usually this is kind of some sort of consolidation before ultimately making a move up or down, right? Eventually we might see a breakout, and that's where breakout trading, I've got an entire video series and all sorts of videos on breakout trading. If you're interested in that, maybe you can check out one of these videos here. But here's the thing about trading a range. We're not interested in necessarily the breakout. We're looking for fading that move and playing the range as long as it's available. We know as range traders that this is going to break, that it's going to stop working at some point. Whether it breaks out to the upside or it moves to the low side doesn't really matter. We know that opportunities in range trading will go away as price will start to trend eventually, but for the most part, we're looking to take advantage of this area, right? The area where we do see markets starting to range. So how can we spot them first of all, and how can we actually trade them effectively? How can we get involved on the long positions down here and ride those bounces? And how can we short into a market that's at a structure high? Again, that's the point of today's video. Thanks so much for being here. Let's go ahead and get into that concept right now. So what we can see here, if I get rid of my sketch pad, is I'm looking at gold. And one thing I want to point out about gold is usually gold is a very, very trending currency pair or commodity, whether you want to call it one way or the other. Again, usually it's a pretty trending instrument. However, what we can see here is that we do see a scenario where price is not really moving a whole lot. And what I want to show you guys is if I just get a simple zone drawn here, right? Take a look at this kind of observation here, right? What you can see is that if I just draw here, we'll make this pink, right? What we can do is we can start just highlighting some zones here, because I think it's important to just kind of talk about what we see. If we're talking about a ranging market, one of the first things I like to do when looking at this is I like to highlight significant zones of support and resistance, right? Because usually what's happening in a range-bound market is we're seeing price respecting support and resistance. We're seeing price again and again bounce and respect previous levels of historical significance. Now, what we can see here is, take a look at this. This level here, I'm going to zoom in just a little bit. We'll see if we can fit this on the screen. What you can see here is that price is respecting both levels on the top of this range, like this one here, this level here, right? Along these tops here. We're finding sell pressure along the tops. And on the contrary, we are seeing buy structure support along the bottoms here, right? So we're seeing buyers and sellers pushing price ultimately sideways. This is why we see a range to the sideways. You could also call this a kind of sideways channel. That's another way of putting it. But I like to just think of it as a range bound market. Why? Well, here's our top of our range and here's our bottom. Actually, what we'll put top, right? And we'll put bottom. So we have a top and bottom to this range. And with that comes some interesting opportunities. So when price starts to get up into these levels of resistance, you can see, how could we actually trade this? Well, again, price is respecting these levels. And with that in mind, there might be some opportunities to get involved off of these highs and lows. Now, what I'm talking about is looking for some opportunities within these, kind of within this range, looking to fade movements that get too high and looking to buy movements that get too low. Right? Something as simple as a Bollinger Band or candlestick patterns or RSI, right? Simple tools like this can actually be very effective if used in the right market context. And that's what's really important about this concept for you guys to get, is that when a market is moving to the sideways direction, right? When it's chopping back and forth, here's where we can get our tools out and we can start trading, fading and reversing. If you like reversals, a range bound market might be a good opportunity to look for, right? When a market is trending really strong, it's very difficult to catch the top, right? If you're trying to short into this market, of course, you might be trying to short here and here and here, right? But usually if a market is range bound, considering that it, for the most part will stay range bound for some amount of time, we get a pretty good opportunity to get a nice little edge trying to short into the structure highs. And so what we can see here is if we back out of this for a second, and let's just say, for example, that we insert on something as simple as a Bollinger Band. So I'm just adding a standard Bollinger Band. We'll make sure this is thick enough for us to see. And take a look at this. What you can see is that when we're in the context of a range-bound market, the Bollinger Band is actually not too bad of a tool. Sometimes people love the Bollinger Bands. Sometimes people hate them. Kind of comes down to preference. Some people are just going to like other tools than, some tools, and other people are going to like other tools. But the Bollinger Bands actually can be pretty effective, you can see, in the right market context. Now, what you can see is that if we kind of get back on our sketchpad for a second, take a look at when price starts to fade outside or get it outside of our Bollinger Band, like this scenario here and this scenario here, right? And you could say this one was kind of not a great trade, but you can see that eventually it snapped back. And, you can see we did close outside over here, right? So just looking at these scenarios, look at our win rate here, right? So if we had taken a buy position in this area, and we also took a buy position here, right? This would have been a loser. And these two trades would have been probably winners, right? Nice little shorts in that context. So something as simple as a Bollinger Band, guys, in a range-bound market could potentially be a pretty profitable system, especially if you look for other levels of confluence. For example, if we back out of here and let's say that we're looking for some sort of candlestick pattern, what you can see right here, if I insert another shape, right, and we'll make this one, let's say we make this one, is light blue a color? It is a color. Okay, yeah. So you can see like right here, right? Look what we had on our chart right there. For those of you guys who do not know what this is, or you can't already spot it, this is a bearish pin bar. This is often a sign of a nice little potential reversal. Now, what's beautiful about this setup is that there is a couple factors here that give us a nice little opportunity to the short side. Number one is that we entered this big sell range, right? That opportunity that we talked about because of structural resistance here previously, looking on the charts, a nice little sell side action reversal potential, right? The next thing that we pointed out is take a look. Our Bollinger Bands, we've closed outside of them, meaning that we are pretty stretched to the upside currently. Now, one more thing you can see is that if I got out of here, I'm sure if we insert some sort of RSI, right? And I have an entire video on RSI if you're interested in trading with the relative strength index. But let's just say we use 4 just because I like the 4 period. You can see that, for example, we were printing overbought. So a couple different factors here, guys, that gave us a nice little opportunity, telling us that in this range-bound market, price was looking stretched to the upside. We saw a nice little a bearish pin bar reversal potential here. We saw that reversal zone, right? That level of structure, and we saw a RSI printing an overbought level. Using multiple factors like that could be really, really powerful, especially in a range-bound market where you could look for reversals. Now, if this market was absolutely trending like crazy to the upside, would this be as interesting of a level? Maybe not, right? But because of the market context, which is something that, again, people oftentimes don't pay attention to, we have a market that's moving sideways. We're not directionally kind of biased, right? The market has entered into kind of a consolidation zone. We've stopped, doing higher lows or lower lows, right? What we did see is we saw markets kind of trending back here, right? We were making lower lows here and lower highs as well, but that kind of changed when prices started putting in higher lows, higher highs, right? Breaking that structure. So now we're more into a sideways channel action if we look on the context of, again, this 4-hour chart that we're looking at. So when price came up into this area, that would have been a beautiful little trade to the sell side. Now I know that I'm speaking on hindsight bias. We've already seen what's happened in this market, but again, these are theoretically clues that you could piece together in real time on a particular market environment. Now, again, it's not going to work out perfectly. For example, if you tried to do that here in this market environment, or this kind of pullback in this market environment, this wouldn't have been such a beautiful trade. You can see that we did get a oversold reading on the RSI, and you could have argued that this structural point here was a pretty decent one, right? And what happened? Price continued lower. There's no such thing as a perfect entry, guys, and that's why I want to be transparent about this. I don't want to make you think that there's some sort of, magical combination of things that's going to make you have perfect win rate. That's not what I'm trying to tell. What I'm trying to tell you is that by understanding the market context that we are in, again, a sideways market, a range-bound market, if you will, we can use different factors and different clues to build a trading strategy that gives us some sort of edge. It doesn't have to win every single time. But if we win often enough and we win more than we lose on our trades, that's where we can over time build an edge, right? Let's say that in this case, we had a 1-to-1 risk to reward, right? And we had a 60% win rate. You might say, well, that doesn't sound very good, but over time, even something like this can give you a positive expected outcome. And that's where backtesting is super important, guys. If you don't already know how to backtest, I highly recommend you check out this video, which is going to be all about backtesting. Guys, thank you so much for watching the video, and we'll catch you on the next one.